Okay, long weekend, Labor Day. I wasn't going to put a video up till Monday, being that we don't open till Tuesday. It is my birthday today. I won't tell you how old I am, but I don't feel my age. So I was going to take the day off, and I thought, well, there's probably people who sort of have a schedule and say, well, you know, he posts around 12, this is what I do. So I'll stick with it. I'm going to start off by just introducing a new module that will show up this week that's showing up in Applied Asset Management. I've been working on this one for a while. The hardest part is getting the template down. Once you have the template, you can then substitute in other securities and other futures or options within the same template, but you have to have a story flow. So there'll be a new module called Trading Manuals. The first one that is going up should be up, well, in North America, it is Labor Day on Monday. I can't expect anybody to do anything. So looking at Tuesday or Wednesday. This one here, this first one, 73 pages. It's derivative trading for the U.S. energy sector. I cover contract details, the pricing, seasonality, and calendar effects. And we're really paying attention to CL, WTI, gasoline, heating oil, and natural gas. Go into detail on crude oil futures. We cover calendar spreads, basis trades, and directional trades using futures and options. Move on to refined products. This is gasoline and heating oil. We'll look at a crack spread, calendar spread, and directional trails. Natural gas, CSOs, these are calendar spread options, basis trades, directional trades. Natural gas liquids and biofuels. We'll do some seasonal curve trades using propane and some relative value trades, butane versus gasoline and ethanol versus gasoline. Both of these get blended into gasoline. U.S. power, trading megawatts. We'll look at how you would trade a spark spread. We'll look at options on futures and risk management and implementation. So just to give you some idea of some of the things that are covered, we look at directional outrights, carry and roll capture. I have examples, worked examples for all of these. Curve trades, location and proxy trades, volatility trades, gamma scalping, and understanding Vanna and Volga, and event-driven setups. So if you do have applied asset management, either Tuesday or Wednesday, I'd say Wednesday at the latest, look in that section. You'll see a new module called Trading Manuals. This is the first that I'll be posting. Let's head in and see what the last week brought us. Let's have a look at our economic calendar from last week. We had two big reports. Second look at GDP, second quarter GDP, and PCE, and I gotta tell you, both of them were nothing to see here. No market reaction, not market moving at all. Durable goods, I thought, was pretty good, and I think that probably had something to do with a good rally in some names. Down 2.8 month over month. You may think that doesn't sound good at all. The expectation was for down 4. Previous was negative 9.4, but that's a headline. Usually you want to take out big bulky orders. So looking at non-defense ex-aircraft for July, up 1.1. The expectation was for not much, and that is up from negative 0.6, 1.1. Looking at it without transportation, if you want to take out the consumer bulky stuff, up 1.1. Expectation, again, 0.2. The previous month was 0.3. So that is a pretty good number overall. GDP, not much change here, 3.3 up from 3.1. And that really is coming from real consumer spending, 1.6 up from 1.4. Everything else fell straight in line. Corporate profits, quarter over quarter, 2%. These are really interesting here, the price indexes. Look at the core PCE, 2.5. The expectation was 2.6. Headline, and this is what was within GDP, 2%. The expectation was 2%. Came in right in line. GDP sales 6.3 came in at 6.8. And prices quarter over quarter, expectation 2.1, came in at 2. So your 2.6 came in at 2.5. Your 2.1 expectation came in at 2. Durable goods were good. You had a slight increase in GDP because of the consumer. So far, so good. But there was some tech undertones to the market that made it rather jumpy, but we did on Thursday hit another all-time high. Initial jobless claims still holding at 229. Continuing jobless claims still holding just below 2 million. It's been here for about 6-7 weeks. And initial jobless claims have been pretty much in this range for about 6-7 weeks. So this is telling us that there's not a lot of layoffs going on. Companies not getting rid of people, but because of the continuing jobless claims, they're not really hiring either. Now, I say it's been flat for a while. You typically, these are claims for unemployment. This is not how many people are jobless. This is claims. So you have a period of time over which you collect premiums, right? And then as the week goes on, these people fall off. So it is just these people. And then as the month goes on, these people show up. Hey, I need unemployment. These people fall off. So that it is being consistent at 2 million is saying there are people showing up at the rate that they're falling off, because you do have these initial claims every week, and then you've been sort of flat on on continuing jobless claims, suggesting that probably if we look into the details and see how many people and how many weeks, that the lack of increase in it is probably because people are falling off the rolls and are not counted any longer. And the 4-week average is sitting pretty much in there. So nothing to see here overall. Nothing here has really changed from the week before. So as this data was coming out, it was like, none of this is really market moving. This would be categorized, all of this, more as any market reaction from any of this is more noise than anything, because everything is coming in pretty much as expected or a bit better. Okay, we have 4 different reports here. Here is PCE. This was anticipated all week, and we hit an all-time high on SPY on Thursday. And at 8:30, when I saw these numbers, I thought, well, what's stopping us from hitting another all-time high today? And it was a pullback day on Friday. Core PCE. This is for July, month over month. Expectation 0.3. What do we get? 0.3. Last month was 0.3. Let's just skip over income and spending. This is the price index month over month. This is the core. This is the headline. Last month was 0.3. We get 0.2. Expectation 0.2. Nothing to see here. Year over year, expectation 2.6. Well, there's your 2.6. And here, core year over year, expectation 2.9. Here's your 2.9. Again, really just coming in right in line. Nothing to see here. Personal income, expectation 0.4. There's your 0.4. And for spending, expectation 0.5. There's your 0.5. It's not good news. It's not like, oh my God, that's a lot better than expected. But it's not bad news. It is exactly as expected. And if we think of market efficiency, that the market tends to price in information, we would have said it has priced in those expectations. We got those expectations. You would think the market reaction would be nothing, and we would just continue on with what we had the day before. That sentiment would continue. But it did not. Goods trade balance. Don't read too much into this. This is July. Right, it's gotten worse. Last month was 84 billion. There was an expectation it'll be somewhere around 90. Nope, 103. But this is July. The 90-day pause on the reciprocal tariffs were going to end in August. Companies knew that. I'm sure that was a big rush in ahead of that. So I don't know that we can read much into that. I don't think we're going to get a really clear reading on the trade balance until October, November, December. October will give us September. September should be fairly clean because the 10% baseline tariffs are in. All of the special tariffs are in, steel, aluminum, autos. All of the reciprocal tariffs are in, and de minimis is gone. So I think that September is our first really clear look at what we can expect. And then, of course, you have November and December. November will be for October. December will be for November. As we move here, it'll get clear. In September, we're going to get the August numbers, but I don't know if they'll reflect a full clean month. So again, we sort of have to put a little bit of a pin in this one and say, well, maybe that's not going to be the real number. Inventories, these never really get a lot of attention. We have retail inventories, that's without autos because that can skew the results, and we have wholesale inventories. And there's two ways to look at this. If you have inventories that are rising, it could be that they're just not moving out the door. So it could be that we have a slowing consumer and a slowdown in the economy, or it could be that this is a buildup in inventories against the expectation that the consumer is going to be strong in the quarters and months coming. So let's build inventory against that because, well, the rule in retail, you can't sell it if you don't have it. So you would naturally just build your inventories. This is July, so it's hard to say this is a pre-Christmas buildup. I mean, this is July. Usually for Christmas, your big ordering season would be the summer for usually mid-September, mid-October delivery. You order well in advance so that these things don't really show up in inventory until then. So there are two interpretations. They're both up. Not much. Up 0.1, up 0.2, but again, as expected. Which interpretation is it? Is it that inventories are beginning to build up because they're not moving out the door, or are inventories building up in anticipation of a really strong consumer? Then we got Michigan sentiment, and I think this probably had something to do with some negative feeling, although it's got a contradiction in here. See if you can spot the contradiction of how would you get to that feeling, right? So you have the sentiment. This is the headline number, 58.2. Last month was 61.7. That is a drop in sentiment. The expectation was 58.6, and it actually was, well, their sentiment is not as high as we thought it would be. The headline breaks down into current and expectation. So how do you feel today, and what do you think about the future? So we can try to figure out, well, where did this drop come in? Are they negative about today, but they think the future will be bright? Well, they're actually quite happy about today. The expectation was 60.9, came in better than expected. It is a drop from last month, 68 to 61.7, but better than expected. So it's, as far as today, yeah, it's gotten a little bad, but not as bad as we thought. What about tomorrow? Oh, it's going to be terrible. 57.7 drops to 55.9. It was expected to moderate just a little bit, but it moderated a lot. I think this is the one that is more important. It's sort of like, how's your day going? Not good at all. How do you think tomorrow's going to go? Not good at all. I will get more conservative today if I think tomorrow will be worse. But if my day is not going very well, but I think tomorrow will be better, well, okay, that takes a little bit off. I might not get as conservative today as I normally would, or as I would under the other condition. So that future expectation, consumer confidence, going into the fourth quarter, eyeball that. And I don't know that I'm a big fan of any of these numbers here. Michigan 5-year inflation expectation, 3.5 versus an expectation of 3.9. Asking consumers, what do you think about the next 5 years here? What's your view on this? That's just an opinion. I don't know that it's well informed as much as it is conditioned by how they see things or what they buy or what they're experiencing. In that sense, I'm not sure it's well thought out in terms of all of the moving levers in an economy. And inflation expectation, this is just for the year ahead, 4.8, lower than the 4.9, but up from the 4.5. That's our backdrop for the week. Overall, the data is, it's a little bit better than expectations, a little bit worse than expectations, but there's nothing pearl clutching here where we go, oh my God, nothing here at all. Okay, let's look at our yield curve. The money market rates beginning to look forward and saying, yeah, it looks like we're going to get a rate cut. The 3-month sitting at 4.23, down below the federal funds rate of 4.33, so it is expecting something to happen within the 3-month period, and below the lower bound of 4.25. And capital market curve all the way out to the 10-year. It's Christmas time, but a lump of coal for both the 20-year and the 30-year, and TLT sits TLT, I got it, sits in the middle of that. I'll have more to say about that later on, but I am losing patience with this one. It's up and then it's down. It's up and it looks like it's going to do something, and no follow through. September 17th, FOMC, being that today is August 31st, is 17 days away, with basically 86.4% probability. I think that's 100. However, we do have a jobs report this week, and the question is, the big question on it is it going to be real or is it going to be doctored? If it comes out as the revisions are up 2 million jobs and August created 470,000, I cry foul. That's, to me, I would say that's a doctored report. But is it going to show? The revisions are going to be really interesting to see. And what's the number going to be? I think if it is suspect, the ADP becomes the more important number to watch. What do we got this week coming up? ISM manufacturing in 2 days. Normally you get that on a Monday, but a Monday's a holiday, so everything is delayed 1 day, so you get that on Tuesday. Factory orders for July, backwards looking, yes, you get that in 3 days. We get the full balance of trade, both the U.S. and Canada. This is the official report in 4 days. We've already seen what July looks like, a preview of what July looks like. We get that in 4 days. Beige Book also in 3 days. ISM services we get in 4 days. You get that on Thursday instead of Wednesday. JOLTS is normally Tuesday, but again, 1 day off, so you get that in 3 days. And then we get a bunch of information on Thursday. Challenger job cuts, that comes early in the morning, 7 p.m. ADP at 8:15, and unit labor costs and productivity at 8:30. And there's the big day right there, both in Canada and the U.S., the jobs day. Canadian data, I don't think we have to give any kind of consideration to. Is it doctored or not? But the U.S. data, has he got his fingers in there yet enough to give himself good news? He would be a fool to do it. You come out with a jobs report that shows incredible job creation and revisions upwards. And why would the Fed cut rates at that point? You want a cut in September? Maybe you want to doctor it to the downside so that you can then still accuse the whole department of being too left-leaning and radical and hating a country, right? So, I don't know. It'll be an interesting number, right? It'll be interesting. I don't know that he's got enough influence in there yet to have doctored numbers, so, but we will see. I'm sure he has loyalists everywhere in the empire. We got not a lot of Fed speak this week. We have 4 of them speaking. Reverse repo jumps to 78 billion, but this is common. You're going to have always a jump at end of month, and especially end of quarter, and especially end of year. So the end of September, you have both the end of month and the end of quarter. Why do they do this? Well, you got to place money. A lot of corporations move as much money into cash as they can, so at the end of the quarter or the end of the month, their liquidity looks a lot better, and then they go right back to whatever it was they were doing. Well, they got to put some money in the money market. Maybe there aren't enough securities, so you always have that jump in the reverse repo. Let's have a look at the Fed funds futures curves. It is not giving me an opportunity to get in. I had bid at 95.90. I got that filled. I moved it to 96.89, 96.88. Didn't get the size I wanted. And on Friday with the PCE, I put in a big order at 96.89, just in case there was that 4 or 5 point flush down before it bounced. It would pick me up, and did not, and continued to get stronger. So I think I'm just going to have to grab the size that I want. Q3 is pricing in slightly less than a full rate cut. While if you have 86.4, it's not going to be a 25. If this were a 25, this would be pricing in 100. Q4 is 26.5, so there are your two cuts this year. And what is going to be interesting in 17 days is we get another summary of economic projections. It's like a grid where you have different interest rates, and you say where you think the rate is going to be at the end of the year, and the lower it is, it usually looks like this whenever it comes out, and then they sort of just take the midpoint. I bet you're going to have one way down here. Who do you think that's going to be? One guess as to who that's going to be, but I know when we look at the dot plot, there's going to be one way the fuck down there. I'm looking at you, Stephen Mirren. Q1, another 34. Q2, 26, a 60 here. 2 in the first 6 months, 109. That's about 4 cuts and 7 meetings. Jumping out to the October 2026, we're at 96,975. Implied rate of 3.02, 130 basis points down. And what I've done down here is I put the months of meetings: September, October, December, that ends this year. You have January, March, April, that ends Powell. So that's the end of Powell. Then you have June, July, September, ex-Powell. This is pricing in just a little more than 5 rate cuts. I think September is a done deal. So we've got 4 rate cuts over the final few meetings. You have 5 meetings before Powell is gone. And my thinking is, even if you only get 1 in that period of time, you have 3 meetings without Powell. To think that you're going to get no rate cuts after only getting 2, I think is mistaken. I think you get a rate cut in June, July, and September. I think you get 3 minimum ex-Powell. You have 1 over here, and even if you get 1 more, that is 5. This is pricing in 5 with 5 extra basis points. 96.92 is 5 cuts exactly. I think it's going to be closer to 8 to 10 cuts. I do think you're probably going to get 25, 25, 25 this year. You're going to get 75 basis points of cuts. And I think you might get 1 more before Powell leaves, thinking that, well, okay, job done. He wants to leave with the job done. Maybe that's where it ends. But once he's gone, and Trump has far more influence, I think you're going to see big cuts. So let's say June, July, August, you get 3 more. I think a minimum is, we're looking at 8, I think is a minimum. And it's pricing in 5. To me, if I'm dead wrong, I'm getting 5. It's pricing in 5. If I'm dead wrong, I stand to lose almost nothing. But if I'm right, and it goes from 125 or 130 basis points priced in to 200, 225, 250, that's a huge payoff. That's an asymmetric trade where my downside is minimal to 0 and my upside is huge. So I am looking for size on this one. I've only got 12. Put a 0 on the end and double it. I can easily see myself going to 200, 250 of these contracts because I don't see significant downside. Right? I need 5 cuts. I know I'm going to get 1 in September, and I'm pretty sure I'm going to get 2 more this year. And then all I need is 2 more. Even if I only get 2 this year, all I need is 3 more. And we have 3 meetings ex-Powell. And you know how Trump can be. Nobody wants that guy in their life. Give him his rate cut. Give him his rate cut. And in all honesty, the job market needs it. Inflation isn't really a problem when you remove the base effects and you account for the fact that, yeah, but you had tariffs. You're going to get this little tick up with tariffs, but it only happens once. And let's not forget about AI. I don't think AI has even begun to do the damage to the labor market that I believe it's going to do. I really do think that in a couple of years we are going to have no choice but to go to the zero line. So this to me seems like a no-brainer trade to make. Okay, real yields, the 10-year. Look at that, getting more and more below the critical 2% level, 1.82. Look at that 5-year, 1.21. 20-year and 30-year, still lumps of coal, not coming along for the ride. In OAS, if you are investment grade, very good credit, maybe we don't want so much of you, but look at what we want of the high yield. Now, this does make sense. If you are expecting a rate cutting cycle and you expect the economy to remain strong, you typically reach for spread, which means that you go down in the credit spectrum. You'll say, well, instead of this rating, I'm willing to take a lower rating, and I'm willing to go a little bit longer in terms of how much spread duration I'm taking on. So it is consistent with what we'll see later on. Small cap outperformance. IWM, again, has outperformed large cap. I think that continues on. This would be consistent because in the Russell 2000, you are more likely to have a significant presence of high yield companies. S&P 500, large cap, significant presence of investment grade companies. We'll look at Perplexity in a minute, and we'll look at what's going on with Lisa Cook. Mortgage is 6.56, down another 2 basis points. Every move down is helpful for the housing market, and the housing market is I think that the cliff falling is over. It's not falling off a cliff anymore, but it's certainly not getting back on the horse. It's down for the count for a while. New home sales, we are backwards looking here. This is for July, down 0.6% month over month. A home price index for June, down 0.2% month over month. So the combination of this, you get housing prices coming down, you get mortgage rates coming down, both help for affordability. So if you can get housing prices to remain flat or even drift slightly down, you don't want them really dropping, because a lot of people's wealth is tied to their home, and you got 68 to 70% home ownership. You got about 20% of the population that will always be renters anyways. They're not looking to live in a home. They don't really want a home. They'll always be renters. So you don't want big housing price drops just for the 10% who say, I can't afford it. But both of these things are helping. The house pricing index down 0.2%, mortgage rates coming down, both of them help for affordability. Case-Shiller, flat. Even year over year, that's not too much, 2.6, 2.1. Typically, you can expect housing in aggregate to rise at the rate of inflation, in aggregate. That doesn't mean some areas will be hot or some periods of time will be hot, but in aggregate we would expect that type of rise. It is a hedge against inflation. Why? Well, because if you build a house today, in 5 years with inflation, it'll cost you, T minus 5 cost times 1 plus whatever the inflation rate is to the power of 5, right? It's your replacement cost grows at the rate of inflation, so your house should grow at the rate of inflation if you maintain it. And that's sort of what it's suggesting here with the 2.6, the 2.1. Pending home sales for July, down 0.4. So housing is not getting a lot of good news in terms of the statistics we're seeing and the numbers, but things are nudging in the right direction. You keep that mortgage rate nudging downwards. You can keep the housing price index flat over time. Housing affordability improves incrementally. Once you start getting those rate cuts and you start getting 10, 15 basis point drops in mortgage rates, over the course of a month, by the end of the year, we could be printing a 5 on a mortgage rate. You could be looking at a beautiful spring buying season. Okay, let's use some AI in our market outlook again. I am using Perplexity. Perplexity is great for these kind of things. When you have compounded questions and you want to put them together, you ask, Tell me about the current situation between Trump and Fed Governor Lisa Cook. Please give me a timeline. Right, so this is what you get. 2022, May 2022, Lisa Cook is confirmed by the Senate as the first black woman to serve on the Federal Reserve Board of Governors, nominated by then President Joe Biden. A whole bunch of reasons why Trump would not like her. Number one, it's a Biden appointee. Number two, he's probably going to read into that and say, well, that is just a woke appointment. Maybe she wasn't qualified. The first black female appointed to the board. You know, there's two boxes that are checked. He may be looking at that, or their side may be looking at that. You know how they purged wokeness from everything? Maybe this is what they're looking at. But it's a Biden appointee. Obviously, she's hostile to Trump and Trump's agenda. She's a saboteur. There'll be public trials where she will be found guilty. And there's, in essence, there has been that, hasn't there? I mean, the allegations were put out there, and now, you know, most people have the suspicion that, oh, well, now she does it. So it's not a matter of they have to prove she did it. She now has to prove her innocence. There will be trials. August 25, Trump announces via social media his intention to remove Lisa Cook, citing sufficient cause based on allegations she made false statements regarding mortgage agreements for properties in Michigan and Georgia. Cook responds publicly, asserting the president has no authority to do so, stating, I will not resign. I will continue to fulfill my responsibility to support the American economy as I have since 2022. She denies wrongdoing and says the allegations are politically motivated. Can we call it lawfare, maybe? I believe there is an investigation from the Justice Department on this, so yes, I think we can call it lawfare. August 28th, 29th, Lisa Cook files a lawsuit in federal court. That is interesting. First legal move comes from Lisa Cook. It's like sitting down for a chess match and one side tweeting out, I'm going to beat the crap out of this opponent, and the other side moves first. Files a lawsuit in federal court to block her removal, seeking a temporary restraining order and claiming Trump's move violates the Federal Reserve Act, which states a governor can only be removed for cause. Now, I haven't read the act, but a lot of contracts that have a for cause clause in it also includes anything you do that might breach the law outside of what you're doing that reflects poorly on the institution. So you can be removed for cause if you do something really bad in your job or you break a law. Some have that particular flavor to it. I shouldn't say some. I think most have that particular flavor to it. So maybe this does as well, and that's why they're going after this allegation. She argues that the president's actions threaten the independence of the Federal Reserve, and her case may reach the Supreme Court. A federal judge hears arguments on August 29th, noting the case's unprecedented nature and its implications for central bank independence. Judge postpones a decision, emphasizing the unique status of the Federal Reserve and the requirement for non-political pressure. Some key issues and broader impact. Trump's attempt to remove Lisa Cook as part of a broader campaign against perceived adversaries. Well, yeah, I don't think that needs to be said. If Cook's dismissal is upheld, it could allow presidents much greater power over independent agencies. If the courts block the move, it reinforces the Fed's autonomy. No prior president has removed a Fed governor, making this a landmark legal fight that could have lasting consequences for central bank governance. It's a big deal. She fires the first shot. Well, he fired the first shot, which really wasn't actually anything more than what he normally does. Is its MO, threaten, bully. If that doesn't work, then try something else. But always start there. So there we go. That is what's going on with Trump and Lisa Cook. Let's have a look at SPY. August 28th, 648.65. Closing basis, not intraday. Intraday is interesting to see, but it's the close that matters. That becomes part of the record. part of the tape. 648.65 all-time high with a pullback on Friday. Forward 4-quarter operating earnings 283, closing SPX sitting at 22.8 versus 22.85. SPY had a small pullback, 0.1. TLT and the dollar index flat. A little bit of implied volatility coming back, 27th percentile. What is nice is if we go into September with some higher volatility and you have a lowering of the interest rate, it tends to increase premiums. So the volatility increases premiums, the lower interest rate will increase the premiums on a particular strike call. That may seem counterintuitive to you, so I'll draw it out and I'll explain it. So let's say you have SPY that looks like this, right? And you're looking at a series of calls. Calls, you think this is the stock, and if you draw a line like this, you think, well, that's at the money, right? So if this is 644.95, let's call it 645, you think that's at the money, so that these are all 0.5 deltas. That's not the way it works. The options are priced on the forward curve. So at 645, the further out you go, the more in the money it happens to be. And for the 645, this is the call. If you have the 645 put, the more out of the money the put happens to be. So as you get, if this is let's say 3 months out, as you get a lowering of the interest rate, you get a lowering of the forward curve. If you get a lowering of the forward curve, it is the put is not as far out of the money as it used to be, so its premiums tend to increase. And the call, notice that it is not as in the money as it used to be, so its premiums tend to decrease. So the flatter, the more closer to zero you move, the more closer. Listen to my English. I just learned it 59 years ago, so give me a break. The closer it gets to zero, the flatter the forward curve goes, the more we can say that 645 has a 50 delta, regardless of when you would take it, if you have zero across all tenors. So with higher implied volatility, the premiums tend to increase. With lower interest rates, the premiums on the puts tend to increase. It becomes more profitable to sell premium on the put side. Have a look at IWM. It's up 0.14. SPY negative. TLT negative. IJR, which is high quality small cap, negative, and QQQ negative. But look at these little guys. Consistent with what we saw with the spreads. High yield spreads shrinking. So not only is money coming in, I think, into the small caps, it's coming in across the capital structure. It's coming in at the debt level. It's coming in at the equity level, because that is alpha. The difference between, well, I wouldn't say it's alpha. It's alternative beta, which is size, small cap outperformance 0.14 versus 0.10, 0.25% of outperformance. I personally think on a going forward basis, now is the time to switch in the small caps. For the last couple of years, 2.5 years, SPY all-time high, all-time high, all-time high, all-time high. The all-time high on IWM, 241.98, hit it once after the election and failed to hit it ever again. Earlier in the year, I was short the small caps at the 240 level because it was too soon. It didn't belong there. Now is the right time. Now I think it belongs there ahead of the rate cut, because I think it will be a beneficiary of rate cuts more than large cap, because large cap has debt, but large cap has investment grade debt and also manages their debt quite well with swaps. So for the most part, with fixed rate debt, it probably won't affect them as much as it will with the small caps. And AI, I think dollar for dollar small caps will get a larger benefit from AI than large caps will. All businesses will benefit. Large cap will benefit, but I think small cap is positioned to benefit even more because they are typically resource constrained to begin with. It is difficult to compete for IT talent with the big guys when you're a small company. But with coding assistants in Claude, in OpenAI, in Gemini, you can increase the productivity of the crew that you have. And I think that will accrue to small caps more than large caps, because large caps are not resource constraint when it comes to their IT talent. So for that reason, I think IWM will continue to outperform SPY as long as if you get a rate cut in September and the narrative is that we are getting more rate cuts, I think it's going to do very well. Companies that will do very well, extremely well, is look for companies on their balance sheet where their liabilities are mostly financed by repos or very short-term rates, where most of their liability is floating rate. They will do very well with the drop in rates. And if their asset side are financial assets, well, that is capital market determined. You need the long end of the curve to come down, and right now is look at this. Right, not coming along, but at least you'll have this side. We got some earnings this week, and they agree, but they don't agree on what day, who's reporting what. So I'm going to give you their best guess as to when Lululemon and Broadcom are reporting. They tell me Friday. Okay, it's Friday. I'm just going to take their word for it. Maybe it's not. Maybe it is. Who the hell knows? This is the world we live in. I have exposure to both of these, so Lululemon and Broadcom. Broadcom, I have exposure through being short puts. With Lulu, I am long the underlying. I think I have some short puts as well that haven't been assigned. But that's that I have to look forward to, along with the jobs data at the end of the week. So, no risk for me. Okay, let's head back to Perplexity. Big thing that happened after the market closed on Friday. I get this little message across my iPad. The Circuit Court upheld the decision of their lower court, well, not the lower court, the International Trade Court, that the tariffs are illegal. I looked at that, I thought, oh, you know what? They're still trading till 8 p.m. It was like 6 because stocks still trade. So I log in, I look, nothing's moving. Nothing's moving at all. I get a few headlines, one from Barron's, one from Wall Street Journals. They're just headlines, no detail. And I'm thinking, give me detail. It wasn't until later that you got the detail and you thought, this is really not going to change anything. It shouldn't change anything when futures open. And I think futures will still open Sunday night because the rest of the world does use the U.S. futures for hedging and for directional trades. Even though the market won't open till Tuesday morning, we'll still get some idea on futures. Oh, well, what time is it now? It is 9 o'clock Costa Rica time, which is 11 o'clock New York time. Oh, my horses should be showing up soon. It's 9 a.m. The horses are being delivered between 9 and 9:30, so I should wrap up here soon. And I got to look at another house at 9:30. There's another house in this neighborhood that's for sale. I don't plan on buying it. I plan on stealing it. I'm not going to offer anything near what the person is asking. But it is on a nice piece of land. Let's have a look at what happened here. Most of Trump's 2025 tariffs being struck down as illegal by a federal appeals court. The current tariff set to expire as early as October 14th unless the Supreme Court intervenes. The abrupt cancellation brings major policy changes. Not really. This is where it sort of went a little offline when I asked Perplexity, what happens now? And it sort of surmised and guessed at what would happen without really understanding the personality of the administration. Court ruled Trump overstepped his authority. No kidding, right? Using emergency powers, meaning most tariffs on imports imposed since April will lapse unless a successful appeal is heard. The court provided a transition period for possible further legal action from the administration. This is an important point. The permanent cancellation of the de minimis exemption will remain in effect, so all low-value imports will face duties regardless of country or court ruling. That wasn't an imposition of a duty. That was a removal of an exemption, so that, no matter what, stays. As far as what's left, economic effects, retaliation, it sort of takes from the starting point that, this is a done deal and it's over and it continues on, which is not going to be the case. So I asked, what options do they have? Look at all these other options. Section 232. This is where all the other tariffs sit that are not declared illegal. Steel and aluminum, they would stay in place. The automotive, they would stay in place. Also, he expanded that considerably to cover another 400 products. So whenever he puts tariffs out, he then negotiates exclusions. But then he polls all the businesses, and there's a process where all the businesses in the U.S. can then say, oh, can you include this in your tariff list? Can you? Those are called inclusions. And they, I think August 18th, added like 400 more products that are derivatives of steel and aluminum that are now part of the inclusion list. Section 232 allows the president to impose tariffs if imports threaten national security, but require an investigation and report by the Department of Commerce. Historically used for steel and aluminum, can only target specific products or sectors, not broad across-the-board tariffs. It's not going to help them out very much. Section 301 of the Trade Act impose tariffs when a foreign country engages in unfair trade practices after an investigation and negotiation effort by the U.S. Trade Representative, commonly used against intellectual property theft, forced technology transfer, and such. That's not going to get his across-the-board tariffs in place. Section 338, up to 50% tariffs or even bans imports from countries found to have discriminatory or unreasonable trade practices. Well, you know, do they have to find do a research report, or just say it? They're ripping us off. They've been ripping us off for years. They laugh at us every day. It's all unfair. It's all rigged against me. Yeah, you just say it, right? You just say it. Anything he's going to do, obviously going to come with a court challenge, but there's plenty of room here. Section 122 empowers the president to impose a temporary surcharge up to 15% on all imports during a balance of payments emergency. Don't know so much that there is a balance of payments emergency, but it's an emergency if something suddenly shows up. But if something has been going on for 45 years, you can't say it's an emergency. You know, I'm not holding an emergency because it's my birthday. Oh my God, have you seen that I'm aging? I've been aging for 59 years. It's not an emergency. It's disheartening. It's sad, but it's not an emergency. If I were an actor or a model, it would be an emergency, but that would have been an emergency 20 years ago. Section 122 of the Trade Act. Oh, we already did that. Come on, Mark. See what happens with age? Negotiated bilateral trade agreements. Well, he doesn't negotiate, he dictates. And they're not bilateral, they're one way. You take what we're offering, or I will punish you. Outlook. None of these authorities is as broad and fast-acting as IEEPA. Most require specific investigations, findings, public notices, congressional involvement. He does not like that idea. Tariffs under these statutes tend to be subject to greater scrutiny and potential legal challenges. Trump could use some of these for more targeted tariffs or as stopgaps while pursuing longer-term legislative changes. Okay, AI news. I don't have much this week. I am now a Google AI Ultra subscriber. DeepThink is now part of the AI Ultra package, so I took it. It was $169.99 a month for 3 months, then it jumps to $340 a month. That's going to be $4,000 a year just for this thing here. Is it going to be worth $4,000 a year? I get DeepThink, but I'll tell you something, it takes a long time. I haven't really tested it yet. But I gave it something that 2.5 could do. 2.5 thought about it, and then it starts printing. It took about 30 seconds to get it all done. About 4 to 5 minutes later, DeepThink gave me an answer. It was a little bit better than the 2.5. Not so much that I'd say, oh my God, look at this. It was, but that's not a fair test. Obviously, you wouldn't use DeepThink to do something that Gemini can already do at about 80 to 85% on average correctness or accuracy. I have to find something 2.5 cannot do and see if DeepThink can do it, and that is answering my level 3 questions, my structured response questions. So I'm going to give it to DeepThink. I already asked it, are you familiar with level 3 structured response questions? And it took 15 minutes to say, yes, I am. 15 minutes. So it may be able to answer the question, but it has 12 minutes to answer the question. If it takes 20 minutes to answer the question, it's going to fail the level 3 exam. That's why most people fail, is they just take too long and they die on a particular question. It's going to make a rookie mistake, but I will keep you posted on Deep Think. However, here is what I did notice. Once I subscribed, I noticed that my output from Gemini got a lot better. So the Gemini output I was getting was already really good. And then I went back to my normal thing saying, okay, here's some notes I need to compile. Way better. It's not just a little bit. It was way better. And I'm noticing the output saying, well, how come you haven't been doing this all along? So not only do you get this, which jury's out on that with me. I haven't really given it a try. But this is much better. I also get no YouTube ads. That's kind of nice. I mean, I could always have subscribed to YouTube Premium and got that, but I felt, let's support the creators. I don't mind watching the ads. They're putting out stuff I'm watching, so here you go. But no YouTube ads anymore. 30 terabytes of storage. I never even used, I think I had 15 gig with Gmail. I never even used the 15 gig with my Google Drive and Gmail. So there's 30 terabytes. You get more VO3 video generation, and it has flow and whisk. I don't really generate video, so there. You get more deep research. I find that kind of useful, and any new feature, you get it first. And you also get the highest limits on Notebook LM, Gemini, all of those things. You get the highest limits as well. Not only that, Google stock hit an all-time high this week. Again, I think we're at, it printed 212 at one closing. I still seem to think 225 to 230 is a near-term target for Google, probably before the end of the year. I am, when I get back to Canada, going to buy the Pixel 10. And I am also going to get the Pixel Buds. This is the phone, and I'm also going to get the Pixel Buds because the phone has a translate feature, and if I stick the buds in my ears and I ask the translate for voice when I hear people talking a foreign language, will I hear it in English in my ears? A universal translator. I don't know. It has those features. It would seem like a big miss if no one inside Google said, hey, wait a minute. You know what we can do? It would seem like a big, giant miss to me. So I'm looking forward to that because I know my staff is talking about me. I'm not even going to tell them. I'm just going to stick those buds in my ears and I'm just going to stand around and go, Okay, noted. Anyways, that's it. Here's some noise outside. I think my horses are here and being unloaded, and somebody's been sending me messages on my phone over the last 4 or 5 minutes. I think it is somebody downstairs saying, come on down, come on down. So there it is. I will end it here, and we'll see you next week.